Despite moderate global economic growth of 3.1% in 2015 and declining growth in sub-Saharan Africa, Standard Bank reported a 27% rise in full-year profit. The results were in line with the group's expectations of increasing headline earnings between 25% and 30%.
I do think that the tough operating environment is reflected in our total income, which was up 9%. The driver of that 9% is obviously net interest income, which was up also about 9%, driven by growth in our loans and advances, which grew quite nicely, as well as fees and commissions, which were up about 8%. The context is one where consumers are finding it increasingly difficult to transact, particularly in South Africa, where confidence is quite low, and business confidence also continues to be quite low. The customer base that is growing the fastest, where we were making these loans and advances that I was referring to, is that part of the South African corporate base that is growing, particularly those that are growing outside South Africa and on the African continent. In both our personal and business banking business, as well as our corporate and investment banking business, we saw good performance, as you saw in the results. PBB was up 15%, whereas CIB was up close to 60%.
The bank says it will stick to its medium-term return on equity of 15 to 18%, but warned that performance in 2016 will be affected by economic factors.
Operating environment is dependent on a number of factors that we do not control as a Standard Bank. We're a player in financial markets, we're a player in the South African economy, but the South African macros define our strategy and our profitability. As far as that goes, like everybody else, we are concerned about the possibility of a ratings downgrade. We think that the actions taken so far by the authorities, both in word and deed, particularly insofar as deed goes, there's actions I suppose that need to be taken. But the steps taken so far make it less probable that a downgrade would happen, which I think is a good thing. And we now have a platform of which to work on inclusive growth in South Africa.
The economic road ahead, according to general sentiment, expert opinion, industry leaders and statistics, is a challenging one for both consumers and businesses, as everyone has to adapt to higher interest rates, higher inflation and slower growth projections. Well, with more interest rate hikes on the cards for South Africa and other emerging economies, experts say the risk of credit impairments become a concern for banks.
Total credit impairments increased by 4%, but our credit loss ratio went down from 1% to 87 basis points. Hiking interest rates is a double-edged sword. It improves our net interest income because we get more income from the higher interest rates. But as you correctly allude to, it increases our bad debts, particularly if interest rates rise far too quickly. A slow and steady rise in interest rates is manageable, but where that rise is a spike, it creates severe difficulties for both consumers and businesses who struggle to meet their obligations.
Nashina Mohammed for Joburg Today.